Bloomberg Audio Studios. Podcasts, radio, news.
Let's turn to private equity. The consortium bank Electronic Arts is set to add more than a dozen banks to its underwriting group after JP Morgan put up $20 billion of debt to bankroll the leverage buyout. The banks are in line to share roughly $500 million in fees for arranging the financing. Joining us now, a man who knows something about a leverage buyout, Steve Pagliuca of Bain Capital. Steve, it's good to see you, sir.
Great to be here.
Good morning. Let's reflect on your time. The largest leverage buyout ever before this one was HCA back in 2006, 2007.
Right in there, yeah.
You were right there in the middle of it. Describe that moment and how it compares to what we're seeing play out now.
Well, it's really interesting. I think that buyout was $5 billion equity and $27 billion debt. This buyout is much more equity, kind of $30 billion of equity and $20 billion of debt, maybe $35 billion of equity. So the markets have changed to that extent that you can't leverage as much, but the EBITDA is a little less. Very quality sponsors, and JP Morgan's a very quality bank. So they did the deal because of the great growth in gaming and media and entertainment, and I think it's a very solid company.
You did tremendously well out of HCA. Need to be very, very clear about that. But the timing of it is curious. It came right at the peak of credit, and this is now too. Is that anything to be concerned about?
I'm less concerned about credit right now in terms of the private credit markets because the private lenders actually are very good. The banks have been very good. JP Morgan, especially Bank of America, well-run, well-capitalized banks. And private credit is different than credit from banks because if it does go bad, you only write off the equity from people that put the equity in. It doesn't have a systemic multiplier effect. So I'm less concerned about private credit. What I'm more concerned about is the size of the national debt and how much interest we're spending on the national debt. It's really interesting. If you go back to when I got out of business school, there was a huge Sturm und Drang about the national debt passing 1 trillion. That's in 1982. So it took 250 years to have 1 trillion of national debt. In the last 40 years, we now have 37 trillion, which is more than the GDP. The GDP is about 30 trillion. So that concerns me more in terms of the impact on the dollar. Interest from the government now is one of the highest expenditures. It's right up there with defense and healthcare. So that concerns me more than private credit.
So Steve, I could probably find you people who were concerned back in the 80s too. And then in the 2000s, and as we went through 10 trillion, 20 trillion, and kept going higher, they were concerned all the way up.
Yeah, unfortunately,
why is this moment different?
Well, I think I don't know if it is different, but in situations like this, it's always okay till it isn't okay. So you get used to, you pass a trillion. Everett Dirksen had a board up that was counting it up at that time, and it passed a trillion. There was a huge outcry. Now it's 10 trillion, then 20 trillion, then 30 trillion. But at some point, you've got to have some long-term plan to pay that money back and get that deficit down because it's eating up huge amounts of the government budget. And as the interest rates roll over, a lot of that is still financed in the old, really low interest rates. They're going to have to refinance it at 5%, 4.5%, and then the number goes up again.
Well, when you see what's going on in Washington, I want to go back to your EA deal. It's not just the size and scope that got a ton of people's attention. There's concern in Washington given some of the players involved. Have you heard from politicians about that?
I don't think there's been a lot of pushback on that, and the deal I think will be controlled by Silver Lake, which is an American, fantastic private equity company.
But with the Saudi PIF being involved, some people think Jared Kushner was brought in just to get the check government seal of approval.
Again, I think Silver Lake's a fantastic firm, and they're leading the charge there. And so I think there's really going to be no concern because they'll be calling the shots on the deal.
Steve, we started this conversation by comparing this deal to HCA in 06, 07. Have the pools of capital changed in the last 20 years?
Yeah, absolutely. When I started out in the industry, there was only 3 or 4 firms doing this, I think, in general. And it was mostly USA. Now it's global. The fund sizes are up probably 20 times from when I started. And also you have sovereigns and big institutional players partnering with private equity. So the dry powder is huge.
Are there enough opportunities to go around?
I got asked that question in 1989, in 1990.
I'm asking it again, 27 years later.
And I feel like a broken record. Private equity, I think, is here to stay. The model has really evolved, so it really is huge value added to kind of transform companies, make them better, globalize them, build new products, and in an environment where you don't have to worry about quarterly earnings. So the model is a very good model, and it's only expanded, it's only gotten bigger. And I think there'll be plenty of opportunities for these folks to invest money.
Well, let's talk about the opportunities now for you and how your sport franchises are going, starting with Atalanta. Steve walked into the room with some Atalanta sneakers with the sponsor New Balance on. The relationship between you and New Balance, can you just describe what that's like at the moment?
Fantastic. New Balance is kind of a fighting brand, growing, taking a lot of share. They really like the Atalanta story because we have the same values. You know, we're kind of a fighting brand against the vaunted AC Milan team that you support. And so it was kind of a match made in heaven. The New Balance is very excited about it. We're excited about it. We've just named our stadium New Balance Arena. I think it's the first arena that New Balance has named. And we're very proud to be associated with New Balance. It's a family company. You know, the Pags Group is a family company, and the Percassis in Italy are a family company. So the three families have come together and hopefully take Atalanta to the next level.
You've done a tremendous job with the team and the franchise. Can you just describe the opportunities now that still exist in the sports world at a time when some people are pushing back against valuations?
Well, no question, valuations are at record levels. Why is that? Is because sports is now the only thing left that aggregates huge audiences globally. And there's been a technology change where, you know, when I lived in Holland in the 1970s, you would only get sports scores 3 days later from an International Herald Tribune. You couldn't watch anything. Now you can watch any team globally, so fans are counted in the billions instead of the tens of thousands, what they used to be 30 years ago. So I think sports still has upside because advertisers, you know, want to reach the globe, and that's the way to do it.
As you look at the sports world, and it's pretty broad, where do you see the best opportunity right now? Because your name's been linked to a team in the WNBA. I know you wanted to bring a team up to Boston. Is that where you're looking still, or is it elsewhere?
We're looking at many opportunities. I think the WNBA is a great opportunity. Women's sports in general, women's soccer in the USA and globally is growing. The NFL is the marquee properties. I think they had record ratings and record advertising on the NFL. So again, I think sports as a category is really a growth asset. And as you have this battle between old media and new media, it's existential for them, and they're battling over these properties that get all the eyeballs in. So I think that bodes well for all the leagues.
John mentioned the WNBA Connecticut team. Do you think that there potentially could be a future for you in that team?
That's something clear. We've kind of stood down for now, and we're going to abide by whatever the NBA wants to do with the team. I think it's very exciting. The ratings are huge for WNBA, and I think it's great that all Americans are following that sport now, and it's going to really take off. And the NBA's done a great job with that. You've done a great job, Steve. It's always good to catch up with you. What a career! It feels like you're having the best of times now. I've been very fortunate. My grandfather came from Italy on a boat with one suitcase and worked in a shoe factory here in New York in the Bronx for $8 a week. So I would say America's a great place. Coming from that, and I've loved the homecoming, coming back to Italy with Atalanta. I get off the plane, and I love it because everyone looks like me there. I haven't lost my Italian heritage.
We've talked extensively about this in the past together, offline, and I'm very proud of you and everything you've done. Steve, thank you, sir.
I really appreciate it.
Thank you. Steve Pagliuca of Bain Capital.